All right. Well, thank you for joining us today. I want to thank you all for taking the time out of your day to join us for today's webinar, Opportunities, Challenges, and Trends in Global Supplier Payments, brought to you by IOFM and sponsored by Tipalti. I do have a few housekeeping notes to go over before we officially get started. If you have any technical questions or issues using the webinar platform, please use the chat box and I will respond right away. You can find the chat box by looking at your lower level toolbar. It's a little blue bubble icon. Just click that to activate the chat box. If you have any issues with the audio at any time, please click the phone icon located above the chat box to receive the teleconference information. Now, for those that do need to call in, to ensure call quality, everyone's lines have automatically been muted. If you happen to get disconnected, you can log on again using the instructions provided in your webinar confirmation email. But if you continue to experience difficulty, please email webinars@iofm.com and we will respond right away. We do encourage you to ask questions throughout the webinar. Please type the questions into the chat box and hit send to submit them. And at the end of the webinar, we will have our presenters answer questions. We will also have 4 polling questions during this webinar. A pop-up box will appear when we run each poll. Please choose from the multiple choice answers and hit submit. We would love your participation and insight today. This webinar will be recorded and you'll receive a thank you email with the on-demand materials within 3 business days. And this will include a link to today's live webinar as a recording, so you can replay that back, as well as a PDF link of today's presentation. So please look for that in your inbox within the next 3 business days. And at this time, I'd like to introduce our speakers for today. Over the past 26 years, Mark Brousseau has established himself as a thought leader on accounts payable, accounts receivable, payments, and document automation. A popular speaker at industry conferences and on webinars and podcasts, Brousseau advises prominent end users and solutions and services providers on how to use automation to improve document and payment-driven business processes. Brousseau has chaired numerous educational conferences and has served on several industry committees and boards. He resides in Center City, Philadelphia with his wife and 3 sons. We also have Anand Misra, is the Director of Product Marketing at Tipalti. Prior to Tipalti, he was the Director of Product Marketing at Oracle NetSuite. Anand has over 15 years of experience in product marketing and product management. Anand has helped launch multiple new products over the years. Prior to joining Oracle NetSuite, Anand was the Senior Product Marketing Manager at ADP. His work experience also includes roles at Thomson Reuters, Wolters Kluwer, and a few startups. Anand has a BS in biology and an MBA in finance. And with that, I would like to welcome our speakers and hand the presentation off to Mark.
Hey, thank you so much, Laura, and thank you all for joining us today. I hope we find you healthy and safe. In today's upside-down world, where everything seems to have changed, one great example is how it is that businesses are paying their suppliers. For years, it seemed that when it came to business payments, whether those were domestic or global, it meant cutting a paper check. Well, as a result of COVID-19, that's no longer the case at many businesses, and we're seeing a sea change in terms of the way that businesses look at their supplier payments. And that's what we're going to talk about today. We'll show you how you can leverage supplier payments as a driver of profitability. We'll talk through some of the payment benchmarks that matter and the ones that can help drive your strategic planning. We'll also talk about why it is it's taken so darn long for so many organizations to move to electronic supplier payments. We'll lay out the benefits of electronically paying your suppliers, and we'll give you some tips for what to look for in a payment platform provider. But before we do all that, I wanted to start with a poll question, which is about to be displayed on your screen. We want to know, before COVID-19, think back a couple of months ago, what percentage of your payments to suppliers were made with a paper check? Was it all of them were made with a paper check? Was it between 75% and 99% of your supplier payments were made with a paper check? Was it 50% to 74% of your payments to suppliers were made with a paper check? Was it 25% to 49%? Was it 1% to 25%? Or was it none of them? Were you completely electronic 2 months ago? Take a moment to respond to the poll question now displayed on your screen. We're going to discuss the results in just a moment. So, Anand, what has happened since the start of COVID-19 in terms of how it is that businesses are paying their suppliers? What are you hearing from organizations?
Sure, Mark. So, COVID happened, right? COVID-19 happened. And, we know from our studies that we have done and industry studies that are out there that 80% of the businesses actually pre-COVID paid by paper checks, which are highly inefficient and costly. We can go into basically, the costs related to it, the fraud, but the benefits actually significantly outweigh to move to electronic forms of payment versus, paying by paper check. And if you look at the cost, they actually are increasing as you go along, not only just the price of stamps, et cetera, but given the current scenario with most people working from home, generally, what is the mechanism to print checks, put them in an envelope, stamp them, and mail them? So those are the challenges. And we see the results on the screen, essentially, which is consistent with what we just described around a large portion of them still use basically paper checks to process the payments. But it's heartening to know that quite a few of them, 1 to 25%, are moving, basically just using paper checks. So I'm assuming they're moving to some form of electronic payments as such.
Yeah, we asked our attendees before COVID-19, about 2 months ago, what percentage of their payments to suppliers were made with a paper check. 48% of the attendees on the line say that at least half of their payments to suppliers were made with a paper check before COVID-19. Now let's see what's happened since COVID-19 has come around. Since the onset of COVID-19, what percentage of your payments to suppliers are now made with a paper check? Is it all of them are made with a paper check? Is it 75% to 99% of your payments to suppliers are now made with a paper check? Is it 50% to 74%? Is it 25% to 49% of your payments to suppliers are made with a paper check? Is it 1% to 25%? Or is it none of your payments to suppliers are now made with a paper check? Have you got completely electronic? Take a moment to respond to the poll question now displayed on your screen, and we'll discuss the results in just a moment. So, Anand, the question becomes, what's taken so darn long for businesses to move to electronic payments? Why has this been such a drawn-out process?
I think it's just the traditional way, Mark, of doing the business in the past, because in a lot of cases, from the payer's perspective, they didn't have enough automation to start processing it. And I think it's just not the payments, from the payments perspective, you look at it, right? You're looking at the overall entire payables operation. And by that, I mean, if you're looking at invoice processing and how the suppliers onboarded, so automation actually plays a big role. And, anecdotally, and the studies showed that industries that have more automation across the board on, invoice processing and the subsequent down the stream activities that go along with it have a better chance of processing payments basically electronically rather than using paper checks.
Is COVID-19 going to be the end of paper checks in business-to-business commerce?
I hope so. And looking at it anecdotally again, people are moving. Unfortunately, it had to come down to this event for people to move on. But we know the hard costs associated with paper checks processing, around $20 per invoice processing. And again, like we discussed in the current scenario, with most of the people working from home, what is the mechanism basically to print, to put them in an envelope, stamp them? And then, the fraud is a big deal too with basically, paper checks as well. And the benefits are significant, right? So our recommendation and my recommendation is this is the time to cut out on low performing and inefficient operations, right? So people should go ahead, companies should go ahead and move to electronic forms of payment. There are multiple benefits that can be realized if you move off paper checks.
A few moments ago, we asked our attendees what percentage of their payments to suppliers were made with a paper check before COVID-19. If you recall, 48% of our attendees on the line said that they made at least half of their payments with a paper check. Well, today, that's dropped to 39%. I'm sorry. I went to public school. You'll have to excuse me. 39% are now made with a paper check. But look at this, Anand. 45% of the folks on the line say that between 1% and 25% of their payments to suppliers are now made electronically. That is a staggering number in my mind. We've done more in 2 months to move away from paper checks than we accomplished in the past several years. Does this surprise you?
Not really, Mark, essentially. So this is the time basically to do that. In addition to all the costs and the benefits associated with processing payments electronically, it's just a function of control that is there, right? People don't have the systems to, print electronically. And the trend already was there. People were moving off basically checks. It's just that the COVID-19 has accelerated it. And I'm hoping, and down the line, that we get rid of paper checks, or at least not completely, maybe to a large extent, and move to electronic forms of payments. It's just so much more efficient, and there's so many benefits, in terms of cash flow, in terms of preventing fraud, in terms of cutting costs, and other areas that can be gained by moving to electronic payments.
Anand hit the nail on the head. He pointed out that it's a real move, not just for survival, but for strategic benefit is the reason that many organizations are moving to electronic payments. It used to be that the function of paying suppliers was seen as a back office task. It was a cost of doing business. It was tactical. It was a drain on your company's resources. But all that started to change even before COVID-19. More businesses started to recognize that optimizing the way they pay suppliers can help the business achieve its big strategic objectives. The things like revenue growth, profitability, and a bigger market share. I probably don't have to tell you folks that automating supplier payments delivers tremendous operational benefits. AP departments can anticipate noticeable improvements in your processes, a reduction in paper invoices, and faster approvals when you automate. And all of this, well, it can open the door to more early payment discount opportunities and fewer calls from suppliers about the status of their payments. But it gets more interesting over time. Over time, these operational improvements can start to drive lower margins as businesses won't have to keep hiring people as their AP departments grow. So this is going to be really important during the recovery. What's more, automating supplier payments improves visibility into your liabilities. And I don't have to tell any of you that CFOs are going to be looking to rein in costs and better control spending as they look to navigate the fallout from COVID-19 and position themselves for that recovery that we hope will come. Even before COVID-19, IOFM's research told us that automating supplier payments can pay for itself in as quickly as a few months, and in the long end, just over a year. Where else do you get a business case like that? And beyond all of these operational improvements, well, all of this is in an environment that's more secure and more compliant than those paper-based processes that we all used to rely on. And so it's for these reasons that more businesses are taking a strategic approach to how they pay suppliers. This is going to go on long after we've returned to some sort of normalcy after COVID-19. Businesses are looking at their payments holistically. And this is really a first. They're trying to not only achieve cost savings, they want to find ways to strengthen their supplier relationships, to improve their cash flow, get better control over their spend, and free up more cash through early payment discounts and cashback rebates on spend. And this chart really shows you the evolution that most accounts payable departments go through in terms of this thinking. Initially, well, you might automate your invoice processing to eliminate payment errors, improve your staff productivity, ensure that your payments are made on time, and maybe even to support payments to global suppliers. But over time, you're probably going to implement measures to mitigate the risks of fraud, to streamline your tax reporting, to ease the burden of OFAC reporting, and to better manage spend by matching invoices with purchase orders and shipping receipts. But it's only when you get to the tippy top, when you're able to take an end-to-end approach to your accounts payable, that you can really achieve a major impact on your business. An end-to-end approach to making your supplier payments can create new opportunities for early payment discounts. It can strengthen your supplier relationships, and it can ensure the effectiveness of your supply chain, all while improving your profit margins and heading off the need for more staff. That's getting a big impact. You skeptical? Well, during this webinar, Anand and I are going to show you how your business can make all of this a reality. But first, a level set. We wanted to show you where most businesses stand when it comes to paying their suppliers. Well, first of all, if it feels like your B2B payments burden is growing, you're not alone. In 2018, U.S. businesses made about $20 trillion worth of payments to one another. That's a lot of dough. And those B2B payments are growing at double the rate of GDP in the United States. So we've got a lot of them, and they're growing fast. And the top industries for B2B volume are things like manufacturing, professional and business services, finance, insurance, real estate, rental and leasing, mining, and wholesale trade. Some of these are going to be impacted by COVID-19. But before the pandemic, this is where the growth was. Most B2B transactions made in the United States are still domestic. And this is also true worldwide. So don't think it's just a U.S. thing. This is especially true in emerging markets. But about a quarter of all U.S. B2B transactions are cross-border. So there's a significant number of B2B transactions that are made to global suppliers. The bad news is high costs and high fees are big issues when it comes to making these global payments. For instance, small and mid-sized businesses in the UK, well, they're paying nearly $6 billion in hidden fees for cross-border payments in the Eurozone to financial providers. And so we have these fees, and they're really adding up for businesses. What's more, we're seeing a case where those fees are growing at 15% compound annual growth rate. So it's imperative that we figure out more efficient and more effective ways to not only pay our suppliers, but to pay our suppliers no matter where they are in the world. And one way to do this is to adopt digital payment alternatives. Now, beyond the growth of B2B payments, one of the biggest trends impacting our businesses is the growth of the so-called gig or freelance economy. And while this is going to be disrupted a bit by COVID, the chances are you're still going to have a lot of these gig and freelance folks that you're going to be paying. Today, 57 million U.S. workers, that's about a third of the whole U.S. workforce, they participate in the gig economy in some capacity. Who are they? Well, these folks work for labor service platforms such as Uber and Lyft and TaskRabbit and Postmates. They're selling goods on eBay and Etsy and Alibaba, and they're leasing assets on Airbnb. And by 2017, half of Americans will have had some experience as independent contractors. Now, all of these independent workers have big implications for our payment systems as businesses. Without an automated platform for paying these independent workers, well, businesses spend large amounts of money and resources trying to manage their accounts payable. A lot of what we were set up to do in the past wasn't really conducive to these gig and independent workers. Businesses that don't figure out a way to pay these gig workers, well, they also risk supply chain disruption. Think about it. 74% of gig workers say they would leave a marketplace if they encounter payment issues. 71% of gig workers say that having the ability to choose a payment method is important to establishing loyalty. And 96% of gig workers say that marketplace payments matter to them. So when it comes to keeping these freelance and gig workers, you better make sure that you're paying them in an efficient way that meets their needs as well. About 1/3 of gig workers say they've experienced not being paid, and more than 1/4 of them say they've been paid late. In fact, gig workers overall are dissatisfied at the length of time it can take for them to receive a payment from a business. And this really explains why reverse factoring has become so popular among small businesses. We always assumed this was a big business play, but the reality is small and mid-sized businesses are really struggling to get access to that cash. And I think during the recovery, we're going to see even more demand for that. So the bottom line here is it's clear that gig workers are not too happy with the approach their customers are using to pay them. And it's not that we want to put the screws to gig workers and contractors and independent workers. It's that most of us don't have the automation to easily pay them, or any other supplier for that matter. But things have really reached a tipping point. Payees increasingly demand value from the folks who are paying them. We're starting to see this show up in contracts and in pricing negotiations. Suppliers want to be paid accurately and on time, of course, but they also want some flexibility in the method in which they're paid and the currency their payment is made in. They also want options to receive payments early in exchange for a discount on the invoice due amount. We're hearing more and more AP departments tell us that they're getting more offers from suppliers for early payment discounts. Now, there's no question that you can use brute force and keep paying suppliers the way you've always paid them. But there's risks to these inefficient and ineffective processes. Paying suppliers late, well, that can lead to a domino effect in which they don't have enough cash or the desire to pay, to give you their services if they're not paid. And this can disrupt your supply chain. So being able to offer not just timely payments, but also options for early payments, this keeps your suppliers happy, and importantly, it keeps your supply chain moving at a time when we can't afford any more disruptions. So the question becomes, why is it so darn hard for businesses to make payments to suppliers? Well, the root of the problem is that many of us still rely on manual or semi-automated accounts payable processes for making payments to suppliers. On average, 36% of the invoices that businesses receive are paper. What's more, many businesses lack the technology to automatically process the invoices they receive as PDF email attachments, the fastest growing invoice delivery channel. So what are businesses doing? Well, many of you are printing out these PDF attachments and treating them as invoices that arrived via the mail. Some of you actually rescan printed out PDF invoices and put them into a digital workflow. Egads! And some of you think you're really clever, and you give your operators 2 monitors. This is when they could go into the office, and they open the email on one monitor and key it into their ERP on another. It's no wonder that 48% of accounts payable departments say that manual data entry and inefficient services are their biggest pain point. But you could also see the effects of paper and semi-automated processes show up in these other pain points. Lost and missing invoices, receiving paper invoices. These really speak to this inefficient operation that many of us are running. And so across the board, accounts payable departments have been slow to automate. Consider the manufacturing and healthcare industries, 2 of the industries with the highest volumes of invoices. Only 11% of manufacturing and healthcare companies use automated invoice workflow solutions. How could this be? Well, businesses cite lots of reasons for dragging their feet on the adoption of automated AP solutions. It might be a lack of budget. It might be that your current system is not broken. It might be a lack of understanding of available solutions in the market. Interestingly, those at the top level of companies, well, they tend to think that current systems are running efficiently, while those in the trenches, they complain about the lack of executive sponsorship. See, this really shows why it's so key to educate everyone, from the frontline workers up to the CEO, about the real challenges faced by your AP systems. And in the coming months, it's going to be vital. You're going to be approached as AP leaders about, how do I get visibility in cash? How do I get visibility to spend? How can I be sure that we're not opening ourselves up to risks? This is your chance to talk about these inefficient processes. And make no mistake about it, ladies and gentlemen, accounts payable automation has a big impact on your ability to efficiently and effectively pay its suppliers and to move the needle on your business's strategic objectives. After implementing an automated solution, 82% of AP departments saw a noticeable improvement in their AP process. We're going to be looking for every chance to wring costs and inefficiencies out of our back offices in the coming months. Here's a great opportunity. So how is it that we've been able to move the needle so much in AP? Well, it starts with that reduction of paper invoices, quicker approval processes, improved visibility into unpaid liabilities. These are the things that help you get payback on automation. Automation also helps businesses eliminate errors. Companies that don't have a standardized payment process, well, you could typically have a payment error rate between 2 and 4.9%. That's big numbers, and this leads to bank investigation costs and large payment fees to resubmit the payment. So are you wondering what payments automation can do for your bottom line? Well, businesses are saving billions of dollars each year in early payment discounts alone. Some businesses achieve millions of dollars in their own back offices. It's important to note that many up-and-coming companies don't have a traditional invoice process. So for them, this eliminates one of the biggest pain points for AP departments. What does that mean to you? Well, you're competing against these digital board competitors. You've got to make sure that you can meet their agility and their ability to get visibility into their information. However, the news isn't all good for fast-growing businesses. Many up-and-coming companies also tend to have higher numbers of global payments. And their workers and contractors, well, they typically need to get paid as gig workers. So there's some trade-offs there. All of this is coming at a time when businesses are demanding more from their AP function. Think back to 2008 and the financial credit crisis and the pressure that was put on our AP departments to really step up and help be a partner to the business. That's what's going to happen in the coming months. Unfortunately, so much of our time is spent on mundane and risky and time-consuming functions. You know, things like managing suppliers and listening to supplier inquiries and onboarding suppliers and vetting them and managing supplier inquiries and capturing and tax information and managing payment-related information on compliance. We have so little time to think strategically. Having more focus on strategic value, well, that can add to your worth to the business, and it can help you automate those mundane tasks. So when it comes to AP, a lot of us immediately think about invoice processing. And while invoice processing is definitely an important part of AP, there are a lot of other tasks that go into getting suppliers paid. A best-in-class AP process, well, it addresses all of these other areas too. And it's important because they're all interdependent. You need to onboard suppliers and keep the vendor master file up to date, stay in compliance with tax regulations, keep track of approvals for invoices, deal with currency conversion for global payments, communicate with suppliers about payment status, reconcile payments. Whew, the list goes on and on. AP isn't just about paying the bills, which is that common misperception many people have. It's about all of these processes together that are most often done manually. And not only is that inefficient, it adds to risk to the process, the risk of human error, the risk of being out of compliance, the risk of failing an audit, and the risk of hefty fines and penalties. For most companies, the process of paying suppliers is inefficient, risky, chaotic, and manual. Onboarding suppliers, well, that's often done manually via phone or email, which frankly isn't secure. Many companies are buried by paper invoices that require manual rekeying into their ERP. Even big shared services organizations who have automated AP systems are rekeying information on approved invoices into their ERP. I am not making this up. And then on the payment front, you may be dealing with suppliers who prefer paper checks or expensive wires, and this all adds to paperwork and manual effort. A lot of time is also spent on supplier communications, from payment status inquiries, which you're probably getting more of these days, to issue resolution for rejected payments. And on top of all this, you're trying to collect tax documents and keep on top of changes to mailing addresses and banking details so you can keep your vendor master file clean. And some of you are cutting corners during COVID because we're working at home. You can't do that. It's a hectic process that happens time and time again. And folks, it's not getting any easier, which is why we hear it described time and time again as a risky, chaotic, manual, and inefficient process. But these challenges can have a real impact on your business. When you have this kind of inefficient, risky, chaotic, and manual environment, well, it's really hard to be efficient. It's hard to scale to your company's operations. It's hard to stay in compliance when you're dragged down by manual processes. You're missing opportunities to expand to other markets, to create new subsidiaries, to compete with those digital-born competitors. Your finance cost structure is heavy. You're exposing your company to audit failures, to fines, to penalties. You don't have a sturdy foundation to manage growth. So the question is, will your AP team be left behind? Oftentimes, we hear senior finance leaders think that their AP processes are just fine because they have everything handled by their bank. They have this perception that AP just sends one file over to the bank, and then the bank makes payments to payees with little effort from the AP department. We all know that the reality is it's a whole lot more complex than that. AP must coordinate many transactions, manage multiple payment files, reconcile payments manually, often from multiple feeds. And AP essentially becomes a help desk for payees as well as for their bank. And if a payment doesn't go through to a payee, what happens? The payee contacts you, who then must work with the bank to resolve the issue. Worse, all of this is just for payments. It doesn't say anything about invoice processing issues. All of this results in long hours for AP, low morale, and retention issues at a time when our staffs are already overworked. And the challenge of paying global suppliers only becomes bigger as you grow. Complicated global and M&A business structures, well, they're quickly becoming the norm in our new global economy. And there's plenty of companies with international divisions, acquisitions, subsidiaries, brands, or entities. And many of these companies have disparate AP processes that they must manage, like the company structure pictured on this slide. What does the accounts payable process look like for those folks? Well, in a nutshell, it's a nightmare. there's many different systems to integrate. You've got complex processes to try to navigate, manage, and AP teams at each entity. Think about the time and effort just to do PO matching and invoice processing for each of these entities. Before you even get to making a payment, you're struggling to collect and validate and track banking information and tax forms from all of your suppliers at all of your different entities. Think of the resources required to make payments in local currency, logging into multiple bank portals and managing those banking relationships. Think of all the payments that must be reconciled in the hundreds of spreadsheets to do it at the entry level. And then again, at the HQ level. And many companies don't have complete integration from each entity to the HQ to roll up values for financial reporting and close the books. So what happens? Well, you've got to generate reports to see the total view across all your entities. And this is done manually, and it's time intensive, and it exposes you to audit risk. All in all, there's a lot of business risk when you don't have consistent processes and the right visibility across your entities. And it's inefficient too. And it's only going to get worse over time as new entities are introduced. This is the problem that all of us are trying to address. And that brings us to our next poll question, which is about to be displayed on your screen. We want to know, which of the following is your biggest payments-related challenge? Is it high cost to make payments to suppliers? Is it an inability to pay suppliers on time due to operational issues? Is it too many supplier inquiries regarding the status of payments? Is it concerns about fraud and compliance issues? Is it too many incorrect or duplicate payments? Or is it something else? Take a moment to respond to the poll question now displayed on your screen. We'll discuss the results in just a moment. So Anand, I tried to describe all the challenges that all types of organizations are facing with supplier payments. What's the biggest challenge that Tipalti hears from AP departments in terms of paying suppliers on time and accurately?
Yeah, Mark. So, from our perspective, different challenges can take up priority positions depending on the industry. But all the issues listed in the polling question contribute to the challenges in making payments generally, right? You talked about the high cost, not only just using the paper checks per se, but also if you're global on the entity level with multiple banking relations that you have and the cost of FX conversion and the intermediary fees and all the costs that are associated with that, and whether you're getting the right, conversion rates. Do you have enough volume to be negotiating with the bank, in order to get the best FX rate? So all those basically add up. And if you're looking at the inability to pay suppliers, on time due to operational issues, basically I can see the results on the screen, and a large percentage of them, it's actually quite varied, basically. Something else takes the most, I'm assuming basically that operational issues, which if the approval you're looking at is not automated. You talked about how invoice approval and the invoice processing is necessary component of any AP process, and without it, invoices won't get paid. So processes like these are designed to protect a company, basically to help and prevent theft and other potential problems. So automated invoice approval routing, the email approvals, the automatic matching of invoices, POs and receipts, the three-way PO matching as we talked about. And then you talked about, too many supplier inquiries regarding the payment of status. Huge issue since they've been missing, payments or errors in processing. It's the AP staff that is trying to play, like you said, the call center basically, or a support center, to get to the bottom of the issue and correct that issue. And if they don't have the information, they have to go to the respective banks to figure those out. So all these are actually huge concerns about fraud and compliance issue. And, everything related to basically A to E is the concern that we hear.
Anand, I was a little surprised to see that a plurality of our attendees identified concerns about fraud and compliance as their biggest challenge. 21% of the folks on the line. I would wager that if we did this poll 6 months ago, it probably would have been about cost or process inefficiencies. this suggests to me what I've suspected is that folks are really anxious about how it is they're conducting business during this new environment that we're operating in. Is this what you're hearing from prospects as well?
Yeah, absolutely. I mean, it's fraud is like, it's such a broad term, right? It's not just the check tampering and the billing schemes and the fraudulent expense reimbursements that go on, Mark, basically as it relates to that. There could be, even if you're doing electronic payments, there could be phishing frauds that come in, the emails that you get, which you click on and download, you're paying somebody who's incorrect, who's trying to forge who they are, basically. So these are multiple issues related to fraud. You could be paying somebody in another part of the world that you don't know, could be on some watch list, a terror watch list. So how do you reconcile that from that perspective? So these are all the various challenges that you deal with, especially compounded during the current COVID environment as well. And these are critical things that the CFOs and the departments of finance are looking at when folks are not able to go into the office, monitor, print. How is it that they're able to control fraud and all the operational risks that come along with basically working from home currently.
All right. And for those of you who checked something else, I'm not letting you off the hook that easy. I want you to use your Q&A tab and to tell me what your biggest challenge with making payments to suppliers is right now. We'll give you some solutions at the end of this webinar. Well, the fact is, whether your company is up and coming or operates in multiple countries, there's big benefits to automating your supplier payments, particularly now in today's new normal. And to maximize those benefits, you need to automate your supplier payments end to end. Automating supplier payments end to end future-proofs your business. It helps you navigate COVID and position yourself for the recovery. It starts with supplier intelligence, and that's built into the make onboarding easier than ever. Not only can suppliers register on their own, there's advanced vetting and validation built into the core to reduce costly errors. And rules, well, they can validate payment data and payment solution screen providers so that you can have lists, as Anand said, to check against OFAC and other watch lists. Suppliers provide their tax forms or tax IDs into the system, and then they're vetted and validated to ensure the legitimacy and accuracy. So there's no more guesswork. There's no more chance of things slipping through the cracks. Automated invoice capture and OCR technology, well, that's going to eliminate the manual rekeying of invoice details from the process. Approval routing and email notifications, that's going to speed up the cycle times because invoices are synced with payments. The actual payment execution and reconciliation is going to be faster, and it's going to be more accurate and easier. And governing all of this is going to be world-class financial and compliance controls. You're going to have ongoing OFAC and other sanction screening before any payment is processed. Kin matching for 1099s, granular permissions to control role-based views. You're going to have the ability to have audit logs to ensure you have the best internal and external controls in place. You'll be able to instantly see what's happened with the transaction. And all of this is going to be done in an environment that's constantly evolving with technologies. With an end-to-end solution, staff only need to intervene when necessary. And the result? Well, that's going to be a process that can scale along with your business, whether that means you're operating in local geography or worldwide. And that's true no matter how your business is organized. Ideally, what you want is an AP process that scales across all your entities in one centralized place. Here you see an AP department located in a business's headquarters. The business has multiple sub-entities associated with it. Supplier payments are all managed in a central place while still allowing each entity to operate with the correct workflows for their model. And with an end-to-end payment solution, each sub-entity can have different branding, payment methods, tax flows, communications, reconciliation. So they still have this local autonomy and control, but you have centralized visibility and access. What's more, with an end-to-end payment solution, it's not hard or time-consuming to roll that data up to the HQ level so you can instantly get financial reports out as quickly as possible. The financial close becomes effortless. Decision makers, well, they also have visibility across their entities so they can see globally what's going on with their cash and with their spending. What's more, automation makes it easy to take advantage of early payment discount opportunities. Suppliers are having their cash flow strained. They're looking for ways to get cash in the bank. You're looking for ways to preserve your cash as well. Early payment discount models offer a solution. You can have automatic same-day payment processing upon acceptance. And all of this results in a payment process that's not just automated, it's modern. The opportunity to modernize AP is something that many CFOs have aspired to for years, and the benefits are obvious. When you free up finance talent to work on higher value initiatives, now you're able to cut out inefficiencies, you're able to scale your financial operations, you're able to reduce your costs and your risks and your errors. But until really recently, technology simply wasn't available to make any of this a reality. To do it right, a supplier payments automation solution needs to modernize across the entire AP workflow, not just one piece of it, not just invoice processing, not just payments, not just onboarding. To truly future-proof your financial operations, you need an end-to-end solution. Businesses need one that is able to be consumed and used easily. And that's already going to be highly integrated with their existing ERP. Also one that doesn't require heavy lifting and connecting all those dots, and it's cost effective and can serve your needs today as well as in the future. And all of this is going to help you resolve and complete supplier payments in a more timely fashion. So how do you do this? Well, you're going to automate end-to-end supplier onboarding, vetting, and communications, tax information capture, validation, withholding, reporting, support for payment methods that serve different speed and cost, as well as geographical commitments, currency management for both you and your suppliers, invoice capture and approval, straight-through payment execution, as well as reconciliation. These are radical times. We need a radical new approach to accounts payable. So are you ready to begin your search for an automated end-to-end payment solution? Well, there's really 5 things you ought to look for in a solution. First, self-service supplier intelligence. And you want one with built-in vetting and rules engine. You want a tax module to meet IRS standards as prescribed by KPMG. You need global remittances, faster payments, currency conversion, multi-entity management, and real-time reconciliation with your ERP. We're in a global economy. We need to be able to pay suppliers across the globe. You need enterprise-grade financial controls. As your responses to the poll question showed, you know that the risks are higher today than they were just a few months ago. You need a payments approach that helps you mitigate those risks. And you need frictionless, accelerated payments that allow you to gain leverage with your suppliers, but also to strengthen your supplier relationships. If you deploy a solution that offers those 5 capabilities, your accounts payable department will become more efficient. You'll be able to scale without adding staff. Your compliance burden will be minimized, and your financial close will be less onerous. But most importantly, you're going to be creating a department that's future-proofed for the way that business will get done in the emerging global economy. This is what will need in the future. And that brings us to our next poll question, which is about to be displayed on your screen. We want to know, how do you believe your organization's risk of payment-related fraud and compliance issues has changed since the onset of COVID-19? Do you believe your risk of fraud and compliance issues is significantly higher? Do you believe your risk of fraud and compliance issues is slightly higher? Do you believe there's been no change in your risks of fraud and compliance issues? Do you believe your risk of fraud and compliance issues is slightly lower since the onset of COVID-19? Or do you believe your risk of fraud and compliance issues is significantly lower since the onset of COVID-19? Take a moment to respond to the poll question now displayed on your screen. We'll discuss the results in just a moment. So talk to me about the importance of integrating supplier onboarding with an electronic payment solution, Anand. It seems to me that many folks are sitting on processes that are largely siloed today. Why is it so important to integrate that onboarding as part of the end-to-end AP automation solution?
Absolutely, Mark. Essentially, so in many cases, they're either siloed or manual in nature. Yeah. And I think from our experience, it's a huge value add, because when you are onboarding a supplier, it's critical to get the information up front, like you mentioned about the OFAC and the anti-money laundering checks that you can do up front, but also from the perspective of the tax collection. Now, most of the people know that it's upon the payer to ensure that you're able to collect the right kind of tax forms, be it W-9s or internationally, there are different varieties of W-8, and then validate that against the real-time information that you have. You have to do a TIN validation or a VAT tax ID validation, upfront, so that you ensure that you're collecting the right information from the tax perspective upfront. But then it also goes to the next level to collect the information from the payments perspective. And it's hugely challenging if you're paying suppliers globally. Different banking systems require different, information that you collect upfront, different validation. If you're paying in a different currency in a different country, there are a huge set of rules built into the system that you need to get upfront in order to ensure that you're able to pay your suppliers correctly, and you eliminate a lot of the payment error methods and the communication back and front, that goes on between missing payments, incorrect payments, payments on hold between the suppliers and basically the payers as such. So in a gist, it's important to collect it upfront to ensure basically error-free in many cases, or eliminate a significant portion of the errors as it relates to payments.
We know that many organizations don't collect tax documents up front. They chase folks down at the end of the year. Is that a really bad idea?
It is, basically, because, the onus is on the payer, first of all, to collect the right information and then do the withholdings basically at the year end. And we all know that AP departments are actually doing a whole lot, towards the year end. You're trying to chase a supplier, or in the case of mass pay, somebody who's a partner who may have moved, may have changed some information, and then you're running to do the withholdings, basically trying to figure out, what kind of forms that you need to fill out, where these people are. So it's a huge problem. It cannot be an afterthought. It cannot be a manual process. It has to be built in.
We asked our attendees how they believe their organization's risk of payments-related fraud and compliance issues has changed since the onset of COVID-19. 50% of the folks on the line believe that their risk of fraud and compliance issues has increased since the onset of COVID-19. Does that surprise you, Anand?
Not really, Mark, in the sense, because if you look at the prior question to this, I mean, a lot of the attendees responded basically around the concerns about fraud, which is one of the key things. And post-COVID, basically, we know that AP departments who are yet to automate the process before the crisis are facing significant disruption. For example, in AP, simple tasks like receiving, processing, and approving paper invoices generally require on-site teams if you're manually doing it. So how do you manage that in this scenario, and all the fraud concerns that come up with basically, even if you've automated that, connected with the phishing scams that are out there with COVID-19 messaging. So all these things add up. And from the CFO's perspective, being in compliance, whatever systems you may use, is one of the key things which helps them sleep better at night.
Let's get to our questions. We have a number of them from attendees. If you haven't sent yours in, I encourage you to do so right now. Anand, Carol writes in, are suppliers more willing to take payment via virtual card since the onset of COVID-19?
Absolutely. I mean, we have seen it basically anecdotally yet, and there are studies out there that show it for the simple reasons that we've talked about. It's basically another form of electronic payment out there, simply because you're trying to get rid of the paper checks for the very reasons that we discussed earlier. It's costly, there's fraud associated with it, then you're missing out all the early payment discounts that you talked about. It's better for cash flow perspective. And there are a whole lot of benefits that are associated with, electronic payments as such.
Rob writes in, how has automation helped me reduce our skyrocketing number of inquiries from suppliers regarding payment status?
Yeah, so I think one of the key things, and you touched upon it earlier too, Mark, in your presentation was, there should be a portal, right? A self-service portal. First of all, if you put the onus on the supplier to gather the right information up front, it is in their interest basically to provide the correct information or they don't get paid. It's as simple as that. So if the onus is on them to do it, they provide this information. And if you provide a self-service supplier portal, they can log in at any time before even calling you to figure out where if the payment is held up, what are the reasons associated with it, and they can actually self-correct in many ways if there is some information that has changed, right? If they want to change their bank, if they want to change a payment method or a different currency that they want to be paid, it can all be done basically with a self-service supplier portal.
Donna writes in, how can we get mom and pop shops to accept electronic payments? That's my 25%.
Yeah, so I mean, there are real costs basically associated with paper checks, right? I mean, we know that simply to process it, it's about $12 basically to run a paper check, right? And that goes back to basically, it's not just a function of payments, it's the function of automating the entire piece of it. And we have seen basically in the industries that have better automation on the entire invoice processing, what we call payables, both the AP side as well as the payment part, they are actually in better position in saving costs associated with manual payment methods. And then, there's basically early payment discounts that you talked about. If you get paid earlier, you take a little bit less. And from the payer perspective, they are generating revenue for a cost center that's out there. So there are significant benefits associated with automating it.
Robbie writes in and wants to know, how onerous is it to deploy an end-to-end solution? Obviously, IT resources are strained. So is this a big burden on your team?
Not really, Mark. I mean, if you look at, a cloud-based solution, there's no kind of a capital, outlay up front. You're not paying like, thousands of millions of dollars up front, right? It's a subscription-based model. You're not buying any hardware or software that you need to install, maintain, and upgrade. And basically, you can be up and running relatively quickly at a cheaper cost, right? And because it's generally most of the solutions out there on the AP side are simple and intuitive to use, getting the staff trained and ready to use it is relatively easy. And any reputable cloud provider will give you all the support that you need to get up and running fast.
Robbie writes in again and wants to know how an end-to-end solution can help maintain AP compliant vendor master files. I assume what he's asking is, how can this help clean up my nasty vendor master database?
Absolutely. And, it goes back to, again, if you are able to collect, the supplier is able to provide you the information themselves, right? It is basically much more accurate than if you're trying to update it, because if you're trying to call them up, get the information, and via email, it can lead to errors and mistakes that happen either when you're getting the information or when you're uploading or, inputting it into a system that you may have essentially. So the first thing is, if you're able to get the supplier to input the information, you have a cleaner master vendor file than if you do it yourself, right? So automate the process is one of the key things. And if they want to change anything up front, that they want to change down the line, they don't have to call you to do it. You don't need to be the call center. They can go and do it themselves, and automatically it gets updated into the system.
Matthew writes in and wants to know, what are the benefits of using a fintech for paying global suppliers versus using a big bank?
Absolutely. So you covered it very eloquently in your presentation, Mark, around, banks are one of the ways you could do it. But what if you're paying in multiple countries, in multiple currencies? Yeah. You have to maintain potentially banking relationships just to pay out, suppliers in different areas of the world, right? That becomes a huge burden on you. And in many cases, because you're paying out globally, as an example, you're not able to negotiate better FX rates with the banks as such. You may not have enough volume like a big company to negotiate better rates. But if you use, systems that are out there to manage that, who have got good, payment flows that come through the system, they can leverage their volume to get better exchange rates for you. That is one element of it. And then the other element comes basically from the currency conversion perspective. You don't have to go to different banks for that, and then pay out within a single system, within a single batch. That's the key thing. So if you have multiple payments across multiple currencies and multiple different payment methods, you should be able to do it within a single system with just a few clicks.
One last question. An attendee wants to know whether a solution like this can handle reimbursements to employees, which they are currently paying via check.
Absolutely. So reimbursements to employees can definitely happen via the system. These are not basically invoice-based payments. And there is a mass pay payment as well. Basically, you're doing to gig economy workers, online marketplaces, the gaming industry, et cetera, and you can pay it through the system as such.
That will be our final word. Anand, thank you so much for sharing your insights today, and thank you all for joining us. And with that, I'm going to hand it back to Laura. Ms. Laura.
Thank you, Mark and Anand, for a great webinar today. I do have a few housekeeping notes to go over before we officially close out. Just a reminder, everyone will receive a thank you email within the next 3 business days that will include a link to today's live webinar as a recording, so you can play that back, as well as a PDF of today's presentation again. So please look for that in your inbox in the next 3 business days. Also, if you could please fill out the short evaluation form that will appear once you close out of the webinar so that we can better serve your needs in future webinars, that would be greatly appreciated. Thank you again to Anand and Mark for a great presentation today, and thank you to all of our attendees for taking the time out of your busy day to join us. This webinar was brought to you by IOFM and sponsored by Tipalti. Thank you all, and have a great rest of your day.